Good morning, traders. This is a live trade recap. I took one trade this morning right at the market open. I'm not going to tell you what happened. I'm going to show you because it was one of the most interesting trades, probably most stressful trades that I've been in a long time. And I want you to kind of live through the trade and think about what you would do in that trade and what your results might be versus my results. And I'll argue that my results, we don't know yet whether I won or lost the trade, are due to discipline. So that could be I took my stop and I saved myself from a big loss, or I held till my profit target and made 2R on the trade. But either way, it's a successful trade because I followed my plan, I stuck to it, and I exercised trader discipline, which is probably the most important aspect of trading. It definitely is for me. So let's take a look at the video and I'll show you exactly what happened. Also, at the very end of the video, I'm going to show you my screener from this morning. So I recorded it, I captured the screen from my laptop, and I'm going to show you how I picked this stock from the screener in real time. So that'll be at the very end, but let's get right to the trade here. So this is right at the market open. It's just past 9:30, and you're going to see me start to put up some ticker symbols on my chart. It took a while for there to be a stock that actually triggered an entry for me. AMC was starting to sell up on the buyers were pushing the price up at the open, and it was heading up towards its previous day high. It looked like it might give me an entry, but it never broke out over that high, so nothing for me to do there. And then ZIM was also a big mover, at least on my screener. It was up around 7 or 8%. That's pretty big for mid caps. And it had to break through its pre-market high in order for me to look for a trade. It got close at one point, but never really triggered. And then there were a few other ticker symbols up here like Grub that was below the 200 moving average on the daily chart. So there's no trade for me to take there, and I don't necessarily remove them from my chart, but I am ignoring it. I don't put a yellow line, so that way I know, okay, I'm not really looking for an entry here. If it's up there, it doesn't bother me, but I don't have it up there because I'm waiting for some type of an entry signal. All right, and then, yeah, you could see that I just replaced it with TIGR, but that's also below the 200 MA on the daily, so again, just checking it. These are the three that I'm really focused on, and SOFI never got near its previous day high, so there was no entries to look for there. And then as the day continued, so you can see how ZIM was heading up towards that previous high, and you can see AMC is failing. Now, US Steel X, that popped up on the screener a little bit later. Let's check the time. I think it was around 9:45. Let me just back it up here a little bit. Yeah, right around 9:45, the US Steel popped up on the screener. This is the one that I ended up trading. It was trading below its previous day high initially, and it had a really strong run at the open. Does it look extended? Yes, it does, but my plan and my criteria say nothing about me judging subjectively, is the stock too extended or not. I don't mess around with any of that stuff. My criteria is very well defined. It's very easy to take a trade or not, to know whether to take a trade or not. And I trust it because so far, this is, I think, trade number 66. So far, it's proven successful. It's profitable after 66 trades. With well over a 40% win rate, which doesn't sound like much, but it's actually quite a lot. I've talked about this before, that if you are trading all or nothing 2R, after 10 trades, if you have a 40% win rate, you'll be up 2R. After 100 trades, you'll be up 20R. After 1,000 trades, you'll be up 200 times your risk with just a 40% win rate. So don't let that number fool you. If your risk management is good, a 40% win rate can be extremely profitable. So let's take a look and see what happened with this trade on US Steel. So here's where it's coming up near the previous day high. And again, my plan, my trading plan says that the price must break out above that high before I can look for an entry. So that has now happened. So now I'm looking for an entry. What is my entry? It's whenever a 1 minute candle makes a new high after a pullback. So I have to see a price lower than the high of this candle. That's what tells me there's a pullback. It doesn't necessarily have to be a red candle. And that's happening right now here. You can see the top of this candle is lower than that one. So right now it's looking like a pullback. And then my actual entry will be when a 1 minute candle makes a new high. So you can see right here that The tops of these candles are at the same level, $28.99 or $29 was the high of this candle. So I need to see 29.01 in order for my entry to be triggered. So there's 29.01, and you can see I instantly triggered my hotkeys to buy. And now this is a kind of a weird thing that happened. This is annoying when this happens, but there's nothing I can do about it. And I just kind of have to make, I think, the most logical choice here. And what I'm talking about is that obviously I wanted the 29.01 to happen on this candle. It doesn't. It happens the split second that the next candle opens up. So I just combine those two candles together and kind of imagine that that's my timer telling me to stop looking for trades, but I'm already done. So anyway, this breaking over the previous candle is my trigger, but obviously I wanted that to happen on this candle. It didn't, but it doesn't make any difference that it happened 1 second later. It's just as if it happened on this candle. So in that case, I move my stop loss to the low of this candle. This is definitely a consolidation area because the tops of these candles are at the same level. So I think the least aggressive stop loss position is at the low of this candle. The most aggressive would be here. What do I mean by that? Is that the lower the stop loss is, the higher the profit target is, and the harder it is to get hit. The chances of you actually having a successful trade are a little bit lower. So my plan says that whenever there's a consolidation area, to move my stop loss to the low of that consolidation area. So I just judged these two candles as the consolidation area. You might have included this candle. That's up to you. That's the way I chose to play this trade. And you can see that even though I did that, it's a quite difficult trade. So here's my 2-hour calculator. You can download this from patreon.com/tradingarmor. I just put in my entry price, my stop loss, and click this button or hit enter, and it spits out my profit target. And I only trade 2R, so that's the one I use. I also have a calculator that you could put any risk function in there that you want. If you want to trade 0.5 to 1, if you want to trade 2 to 1, 3 to 1, 1.9 to 1, doesn't matter. You can just type that number in and then put in your entry price, your stop loss, and it'll spit out the profit target at your desired risk to reward or reward to risk ratio. So here's the trade. So we're in the trade. This trade takes quite a long time. I'm not going to make you watch it in real time, but I just want you to experience some of the feelings that I did and that you would as well if you were trading this. And I'll show you how I had to kind of exercise my trader discipline at the utmost today. You can see right now it's looking like it's going to stop me out. I don't really worry about it. I've got my stop loss in place. I've got my profit target in place. If it does stop me out, in fact, I expect it to stop me out because I know my first trade, based on my statistics that I've collected, not based on what someone else said or what I've read in a book or anything like that, based on my own statistics, I know that my first trade is the most likely to fail. So I always expect the first trade to fail. It doesn't always fail. It's actually a profitable win rate. Right now, my first trade wins over 38% of the time. It has to win 33% of the time to be break even. So it's profitable, even though it fails most of the time. So that's what I mean by I expect it to fail, but I don't worry about it because I know I'm profitable on my first trade. And I know that I have a much higher likelihood of winning the trade on my second or third entry. So if the first trade fails, I don't worry about it. I just look for the next entry. But let's see what happens. So we're still in the first trade here. I'm going to fast forward it a little bit here. But just think about how you would feel in this trade. It's already started to come down against you. Now it's heading back up. What would you do? Would you start to raise your stop loss and think, okay, I better just take what I can get? It's consolidating here. I don't know if it's going to really break out. It looks like it's hitting a lot of resistance at that 29.09. That's a key level. It can't break out over that. Maybe I should just take whatever profits I can get and run. In the long run, that doesn't work. You're going to end up red because you could see here that this would be like a 0.4R trade, not even a 1R trade if you won this based on the distance between the position and the stop loss. And look what happens now. Now it's breaking out. Now you're excited. Now you're feeling good about this trade. Okay, this is what I wanted to happen. It's breaking out. It's doing exactly what I wanted to do. I'm winning now. Maybe you would have the discipline to keep your stop loss in place. Maybe you would want to move it up and fear that it's going to reverse on you. I don't know. Now look what happens. It hits 29.19. That's 10 cents away from my profit target. That's another key level. You know, if you've been studying trading, you know that those 9-cent levels are very common profit target and stop loss areas, because people know that, okay, there's key levels at the round number, so like at 29.20 or 29.30, something like that. So if people are afraid that there's going to be some resistance there, then they're going to move their profit target down by 1 cent. Instead of 29.20, they'll put it at 29.19 to guarantee they get filled. So that looks like that's what's happening here on US still. Do I let that bother me? No. My plan doesn't tell me anything about worrying about those levels or trying to chase the money up with my stop loss. I strictly trade 2R, all or nothing. No matter what happens, that's what I do. I don't care about all this stuff that's happening in between. So I'm just kind of talking you through some of the thought processes that I would have had when I was a younger trader, and I'm sure that many traders have to this day. And if that's the way you trade, that's fine, as long as you've proven it profitable after 100 trades or more. But if you haven't proven that method profitable, then you might want to reconsider it. I'm not telling you that the way I trade is the best way to trade or the way you should trade, but whatever you do, you need to have a plan, and you need to trade that plan the exact same way on every trade. You need to track your trades, and if you can't get to 100 trades and still be profitable, then the plan doesn't work, and you have to adjust it. So now look what's happening. Now it's coming back down to my position. How would you feel you're in this trade? Okay, now I'm break even again. Maybe I should just get out instead of taking a loss, because it looks like this thing is really weak. It's going to go against me. If you're reading the candlesticks, this is an extremely bearish candle. There is a ton of price rejection here. The price went up to that 29.19 level. Ton of sellers came in and pushed the price back down and said, nope, we don't want the price there. So now look what's happening. Oh, big bullish candle here. You've got a huge wick hanging down. You've got the price running up. Okay, maybe this trade's going to work. I don't know. I'm just kind of imagining, what might be going through your head. Not to say that none of this stuff, obviously I was feeling, I wasn't sitting here watching this thing the whole time. I'll tell you that right now. The beauty of having these bracket orders is you don't have to sit here and stress out. You can go and get coffee, you can take a walk, you could do whatever. I have my phone with me. If I hear an alert, then I know that either my target got hit or my stop loss got hit, and then I have to come back and look for the next entry. So I'm not saying like take a walk outside and then, it takes you minutes to get back. But you don't have to sit here and stress about the trade and judge the trade. That's the key. Do not judge your trades once you're in them. Just judge your entries. So that's what I did at the beginning. Okay, does this meet my entry criteria? Yes, it does. Where is my entry signal? Where's my entry point? And do your best to execute it to the best of your ability, and then figure out where your stop loss is. Sometimes it's a little bit more clear than others. This was, as I said, a consolidation area. So there was a tiny bit of subjectivity there as to where to put the stop loss. And then you calculate your profit target based off of that stop loss, and that's it. You just let the trade play out and you don't do anything. So now it's hitting that wall at 29.20. Let me fast forward a little bit. I'm not trying to keep you stuck, watching this video, but I just want you to experience in real time some of the stress of a trade like this, especially if you torture yourself by sitting here watching it and trying to decide what is going to happen. You try to predict the future of this trade, you're going to drive yourself crazy. And I already know, based on my past history, based on all of the data I collected, that judging my own trades and trying to decide whether I should get out early or take a lower stop or something like that is not profitable. I've never, ever been able to be profitable in the long run doing that. I've been able to have some really great win streaks and some high win rates. I had a 13-day green streak. I've had some really high win rates, but I was always red in the long run, because whenever you have those high win rates and those long green streaks, that means that you're generally taking profits way too early, and then when you get stopped out at your -1R, it eats away a ton of your gains. And that's what I think is a big problem for a lot of traders, especially newer traders. And the ones that never get over that, they end up quitting because they just can't ever make any money at it. So again, I'm not trying to say that I've got this all figured out, but these are my thoughts. I'm just sharing my thoughts with you. So let's fast forward a little bit. Again, the trade now is coming down against me. Here's the pop, goes to 29.21, 29.22. Let's fast forward a little bit, see what happens. Now 29.26. So it's 3 cents away from my profit target after all of that struggling. Maybe I should just pull my profit target down a couple cents and get out while I can, because this thing has reversed so many times and come back down against me. No, I can't do that. That's not part of my plan. If I would have done that, I would have broken my plan and I would have had to go back to trader rehab, which is where I was last week. And, you know, it's not fun doing nothing as far as trading goes every day. So here it is at 29.28. It's 1 cent away. Oh, so close. I should just pull it down. No, discipline is the most important thing. If I can't follow my plan, if I don't follow my rules, they don't mean anything at all. This trade would be an invalid trade even if I pulled that target down by 1 cent, because it's not part of the plan. It can't go on the spreadsheet. It would have been a broken rule, and I would have had to suffer some kind of consequences for it. So instead of doing that, I am willing to take the stop loss if it comes down all the way against me and stop me out by 1 cent. So let's see if that's what happens. Because if that did happen, it would still be a successful trade because I followed my plan and I stuck to my strategy. And I didn't break any rules. And wow, look at this. It's really coming down hard. Man, I was so close by 1 cent, and now it's coming down against me. And I should have just moved that profit target down. Of course, you know I'm being facetious. I'm fast forwarding here because you can see this is a long trade. And these are not the kind of trades that I enjoy, but again, no matter what, I have to follow my plan. So there we go. What time is it now? Like 10:18, and it finally hits my profit target. We'll go back and see when I entered this trade. So there it is, just hovering at 29.27, so close. And there. So that's what following your plan does. I'm not saying it works every time, of course not. In fact, it doesn't work most of the time. But if your risk management is good, then you can still be profitable. As I explained earlier, with a 40% win rate, can be quite profitable in the long run. So I'm just finding out where did we, well, let's see when did we get triggered on this trade to look for an entry. The trigger was at 9:56, and our entry was at 9:59. So we'll just call it a 20-minute trade. That was a 20-minute 2-hour trade on the 1-minute chart. That is a very long trade for this type of trading. But again, I don't worry about that. I just stick to my plan. I was willing to, if 10:30 hit, I was going to shut down the platform and just let those bracket orders do their thing. And one way or the other, either I was going to get my profit target hit or my stop loss hit. And if that didn't happen before 4 p.m., then I would open up the platform and take my loss or take the tiny profit or whatever, because if you're a day trader, you cannot hold overnight. That is another very important rule. You have no idea what's going to happen with these things overnight, so that's just not an option. Okay, so that's the trade. Let's take a look at the screener video. If you're interested in that, I have that up, I think. Let's see. Nope, that's not it. That was some pocket options trades that I took. Where is the screener video? Here it is. Sorry about that. All right. So this is the screener, and you can see here it's right before the market open. It's my mid-cap screener. This is on my laptop. This is recorded from my laptop, not this desktop. That's where I keep the screener open. And so here, let's just go to... So right around when the market opens, I shut it down. I don't think you really need to do this anymore, but this is a habit I developed from back in the day, and I just do it. It just makes me feel better shutting down Webull, and restarting it, knowing that there's no way there could be any kind of a glitch or anything like that. Just shut it down, restart it, and you know you're getting a fresh look at the screener and that it's loaded properly and all of that. So I always hit modify, hit those 3 little buttons, otherwise your filters will not be applied. Then I click on volume and I organize the list by volume, and I'm looking for stocks that are green, so they have to be going up, and then they have to have more than 500,000 shares of volume. So you can see that just from here up, it has enough volume. So it's pretty easy. And then I have to see 2% or more, or very close to that, because maybe it's about to hit 2%, as SoFi just did. And what I'm doing now is I'm pulling the stocks up on my chart page. You can't see that on this screen because it's my laptop, but you saw that in the other video. So I'm pulling these up on the chart page. I'm checking the daily chart, seeing are they above the 200 MA. If they are, they can stay on the chart page. I mark out the previous day high, waiting for that entry signal. If it doesn't get hit, then I don't do anything. And that's it. That's really how I use this screener. So I'll just scan through this video really quickly, and you can see I restarted it a couple more times. Again, that's just a habit. It makes me feel better. I don't think you need to do it. The main thing is that you hit modify, and you hit those three little buttons and you hit modify, and then the screener should be fine. So you can see where ZIM popped up, and then here's US Steel right here. Let's back it up and see where US Steel was earlier in the day. So there it is. It's around 1% at 942. So that's why I wasn't looking at it yet. But then as it's climbing in volume and the percent change is getting greater, let's see where it was at 944. So that's around where I was that where? No, that wasn't where I was triggered. That's where I put it on the chart. And then the trigger was around 950 something. So by that time it had to be above 2%. Let's go to like 958, which is near where I was triggered, and see where X is. There we go. It's above 2%. So that's why I could take a trade on it. My plan says that the stock must be trading above 2%. So that's it. That's the screener. I shut it down as soon as I entered the trade. Actually, I think you could see, yeah, here you could see my order got placed on X right then and there. And at that point, I shut down the screener because I'm not interested in looking at any more stocks. I'm all done for the day. So that's it. I guess I could show you the P&L. It doesn't really matter because I'm just test trading with one single share. And it looks like SPXL is pulling back now, so we'll see some red from that. What's today's date? The 18th. But yeah, right now we're just collecting data. So right now I'm up 12R after 2 months of trading, 66 trades. So yeah, 26 cents, not a big deal. The idea is that it was a 2R trade. If I was trading with full position size, it would have been 2 times my risk. So if I was risking $10, it would have been a $20 trade. If I was risking $100, $200, you get the idea. So that's it. So let me know if you have any questions about this trade or about my trading plan or my spreadsheets or anything. All that stuff is available on my Patreon if you're interested. And then any questions, just leave it in the comment section below. I'll be happy to get back to you. As always, go into every single trade with a plan and stick to it no matter what. You could see how that worked out today. It doesn't always, and that's why we use our stop losses. But you got to stick to the plan. Otherwise, what you're doing is just random, and you're going to have random results. And then always take your stop losses, honor your profit targets. That was the other thing I did that worked in my favor today. And then in the long run, you should be green. So far, I'm up 12R after 2 months of trading, after 66 trades, including breaking my plan once, which was not a good thing. Still up 12 times my risk. So, so far, so good. All right, you guys take care.